Hi, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for June 29th, 2015. This week, I want to talk about the Sector Watch tool, and since Canada Day is just around the corner, we'll make it specific to the Canadian market. Sectors that are strong will then have stocks in that sector that ultimately outperform the overall market. You put the odds in your favor when you play a stock that is in a leading sector. So when considering a stock, you should always consider the strength of the sector chart. Now you can do this two ways. You can look at the sector indices. I'll show you how to do that in just a moment. Or do some Google searches and find out what the exchange traded funds are for the sectors that you're looking at as well. Now I like to look at the 3-year weekly chart for sectors. Let's jump over to Stockscores. What I've done is I've gone into the Sector Watch. I've gone Tools, Sector Watch. That puts me into here. I can go Canadian Indices, and there I can see the index chart. So if I want to see what the mining index chart looks like, simply click on that and I can see the mining index. And I can see, okay, we were having some rising bottoms. That was broken in May, and now we've switched to falling tops. That's a negative chart, but that's only a 8-month chart. Let's take a look at the 3-year chart. Big picture on the 3-year, I can see that we're below this downward trend line. Tops are falling. This is a negative chart, and therefore it is a sector that I would probably want to avoid. Now you can also punch in the symbols of ETFs for a sector. So I know that the ETF for Canadian gold stocks is T.XGD. Pull that up, make it a 3-year chart by clicking on the 3-year link there. And there you can see again overwhelming pessimism in the chart of the gold mining stocks for Canada. Therefore, that is a sector that I want to avoid. Now, if you don't know what the symbols are for the sectors, just Google, exchange traded funds for the Toronto Stock Exchange or exchange traded funds for sectors in the US. Some kind of Google search like that, you'll find all kinds of links to find those things. All right, let's get into this week's analysis. Here is the chart of the S&P 500 ETF going back about a month. You can see we've been stuck in this boring sideways range with a lot of chop. We go up for a few days, we go down for a few days. There's really no trend, makes it a pretty boring market to trade. You can see the market was feeling optimistic that something good was going to come out of Greece, and then nothing good came out of Greece, and so we sold off into the end of the week. We're almost at the lower boundary, and that's where the market should find support. So I expect we'll test that boundary early next week. Here's a chart of the S&P 500. This is a pattern called a rising wedge. You can see that the tops are not rising as quickly as the bottoms, and that is a sign that the buyers are kind of complacent, losing their enthusiasm. However, they're still in control of the market. We are in a long-term upward trend. It's just over the last 4 or 5 months, we've really just been going sideways. And again, that makes for a boring market. As the volatility condenses, you get to the point where you will get a break one way or the other. This is actually shaping up to be a pessimistic pattern. If we break down through this green line, this is again the 3-year weekly chart, this will likely lead to lower prices. So you want to watch it very closely. Make sure that green line isn't broken on the weekly time frame. Here's a chart of the Russell 2000. You can see it looks better than the S&P 500. We're in that upward trend. We're moving very close to new highs. This week pulled back a little bit, but certainly the small cap stocks in the US are outperforming the large cap. Here's a chart of the TSX going back 1 month. Downward sloping channel. The sellers are in control in the short term. Fair bit of chop here, volatility there, but within the context of this downward sloping channel, it's a bearish short-term chart. Longer term, I'm a little worried about this chart because we had a double top. We hit a top here and a top here. Normally that's not a big deal, but when your line of rising bottoms is broken, as it was 5-6 weeks ago, that shapes up for further weakness. We saw that happen. Now the question is it going to try to run up into here again and hit that? Well, when you look at that intraday chart, you really don't see any signs of buyer optimism. So I want everyone to be fairly cautious with Canadian stocks right now. It's not terrible, but it certainly isn't good either. Here's the TSX Venture moving down over the last few weeks. You can see the stock scores are diving under a 50 again, and that just shows the general complacency with the TSX Venture, which is dominated by mining and energy stocks. There are some tech stocks in this market that are doing okay, and that's sort of where you want to focus your attention if you want to play the Canadian penny stocks. I've taken a chart here. This is a monthly chart of the Treasury bond market. You can see that Treasuries went really parabolic right here, up to new highs, and have now pulled back quite sharply. I think we have further weakness to go. It wouldn't surprise me at all if we test this lower boundary in this very long-term upward sloping channel. That is a channel that has been rising upward since 2011, but short term, and by short term I mean over this year basically, we've been pulling back fairly sharply. I think we could get back all the way to here. We've all heard about the bubble bursting in the bond market. Bubbles happen when there is a parabolic trend. So if I was to draw a line across these bottoms, see how the trend really ran up and away from a straight line? That's the parabolic trend that I'm talking about. And that's why we are correcting now, because parabolic trends are caused by emotion. Now that emotion is being priced out of the market. Here's the US dollar. It was in an upward trend. It too went parabolic. You can see how it ran up and away from the trend line. We're now correcting back on that. I think we could see an up week here, but longer term, I actually think that the US dollar could show further weakness. Now that'll change if this red line gets broken. So if you see the market rally up and break through this red line on a weekly basis, then there's buyers coming back to the US dollar. For now, I am on the bearish side of neutral for the US dollar. Gold, neutral chart in the very short term because it's been going sideways, but long term, a bearish chart. You see the tops are falling. We're condensing in volatility down toward the green line of support, and that should lead to lower prices in gold. Until that green line is broken, I won't call for the next leg down, but that's what you want to watch for, that green line being broken. Oil is stable. It's been stable for the last 5 or 6 weeks. It's trying to build a little bit of a rising bottom here, but it needs to break out of this pattern, either up through the red line, bullish, down through the green line, bearish. Watch for that. Right now, it's complacent, boring, stuck in that little range. But notice that the stock scores have gotten better. They were pretty ugly here for a while, and that's because the market is trying to stabilize and turn around, and we may get surprised. We may see oil actually start to come back up, and that would be helpful for the Canadian stock market and the Canadian dollar. VIX, downward sloping channel. Really, fear is not a factor in the market right now. We've said that for many, many weeks, and it continues to be the way. So the outlook then, U.S. stocks neutral on both time frames, Canadian neutral long-term, short-term bearish, gold bearish on both time frames, oil bearish long-term, neutral short-term. It is starting to show some stability. Money is complacent right now, in need of direction. There are pockets of strength in stocks, but you have to be sector specific, so pay attention to your sectors. Now remember, earnings season is set to start in about a week, and that should bring the action back up in the market. Greece will be in focus this week and could bring some direction to the market, but I expect it's just going to be a lot of chop. Commodities are quiet, and maybe that's okay right now after the big drubbing that oil got, but we would like to see some action pick up to the upside soon. Well, that has been the Stockscores Market Minutes for June 29th, 2015. Have a great week in the market and trade well.